Welcome to our week number 3 introduction video for Business 600A, Accounting and Finance. Hi, it's Professor Hassey, and happy Father's Day to all you fathers out there. Today is Sunday, June 20th. And here's the agenda for our class this week. We'll be reviewing Chapter 2 Problems 2 and 7A, which you are to post by this evening to Blackboard for a grade, and we will review those problems tomorrow evening in class. We'll talk and give examples of adjusting entries, adjusting the accounts, preparing an adjusted trial balance, and preparing financial statements and closing entries, the remaining sectors of the accounting cycle. We'll concentrate on exercises 6, 16, and 17 in Chapter 3 on pages 125 and 127. Remember this week, wait a minute. This week, we finish up our professor meetings. If any of you have yet to meet with me, please make sure you finish up your professor meetings this week. If you've already done so, then your grade has been posted to Blackboard. Also this week, we will have again a homework assignment, problems 3 and 5A on pages 134, 136 will be due next Sunday, June 27th. And we'll talk more about those in our class on Monday night. As an introduction to Chapter 3 in our adjusting entries process of the accounting cycle, here's a brief video explaining Chapter 3 from the author.
Hi, I'm Paul Kimmel. In this chapter, you're going to learn about the adjustment process. Companies always need to adjust their accounts at the end of every period in order to make sure that they reflect the proper balances. In some ways, it could be argued that this is the most important thing that you're going to learn in this course. Why? Well, because if a company is going to cheat, they typically will do it during the adjustment process. Many adjustments are routine and non-controversial, but some adjustments require a lot of judgment. Consider, for example, the estimates that companies must make when they're recording their bad debts. This is one of their biggest expenses, and it is completely based on estimates. A slight change in those estimates can have a huge impact on their net income. If you're analyzing a company, you should read the disclosures regarding their estimates. I remember a quote that I read in the financial press after Enron went bankrupt. The quote said, "I wish I had been like the smart people that had read Enron's financial notes." The significance of that quote was that person was a fund manager who lost hundreds of millions of dollars in Enron. He should have read the notes, and you should too.
Okay, and this week, number 3, the adjustment process, adjusting for certain events, depreciation, accruals, unearned revenue, all kinds of fun things, prepaids, all kinds of adjusting entries to our accounts that have occurred with the passage of time or in the adjustment process of accounts already existing. Last week, it was the beginning journal entries, posting to the ledger, and trial balance. Now we go to the next steps, and this is what we'll study in week number 3. I will be posting the agenda and some spreadsheet samples in the in-class review file folder in week 3. Please look for those or refer to them once we have class Monday evening. Look forward to working with you again this week, everybody. I hope you all had a great Father's Day, and I'll see you all Monday evening.